Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. 18 weeks ago, I said about this market, and I quote, "This leaves us with an interesting if complex situation. You see, you could look at the whole of the early November today action as a possible complex head and shoulders top with a split head. It all now depend on whether the market first makes a move down to the proposed neckline of the pattern, that's currently at 30,000 even, and highlighted in dark blue, and then what it does when it gets there." And that's the end of the quote. And that was fair enough. I'd seen a potential head and shoulders top and I'd highlighted it, all very, very sound analysis. And I'll further expand on this in my commentary in a short while. Then 17 weeks ago, I took a closer look at the action from November last year through to January this year, which revealed the following, and I quote, "There's another, more acute head and shoulders pattern in there as well. I've highlighted the neckline of this one in purple to help aid viewing of it. It is much more acute, and I consequently have doubts about it. But the significant feature is that the neckline has been broken on the downside. This makes for interesting viewing of what will happen. This does not take away anything from the larger incomplete potential head and shoulders top at this time. Thus I'm minded to place some potential targets on the downside for this acute head and shoulders top. So a primary target X will be down in the 25080 zone, and a harder to reach secondary target X1 will be down in the 21390 zone." End of quote. Since then, the market has maintained the bearish pressures and prices have dropped below the following: the August 2011 high at 25,195, the long moving average currently 24,773, target X at 25,080 was easily reached in a non-aggressive but somewhat relentless move lower. However, upon approach to the February 2014 high at 22,155 and the associated congestion seen throughout the middle and latter part of 2022 at that and nearby levels, the market started to slow its decline and even recover. Yet the recovery was limited in mid-April by, in part, the August 2011 high at 25,195, but also in part by the overhead and now declining medium moving average, currently 24,945. This set up the latest move lower with a new bearish Andrews pitchfork as well, which I will cover shortly. Now going back to head and shoulders top patterns, this second wave lower finally reached target X1 at 21,390 2 weeks ago. Now, as I said earlier, I would expand on further potentials below for the second less acute head and shoulders top formed since November last year. I said the following 6 weeks ago, and I quote, "We have had that confirmation of the move below the neckline. Thus we have the previous numbers in hand. We had a primary target for the less acute head and shoulders top in the 24,070 zone with a secondary harder reach target X2 down in the 25,40 zone." End of quote. The primary target was reached 10 weeks ago, and target X2, well, that is still alive and also not that far away. This brings me to my final pattern, the earlier mentioned early February to mid-April bearish shift pitchfork, which I've highlighted in bright red on my daily chart. I had a small breach of the upper time, currently at 23,765, but this was quickly repaired, and the market is now congregating around the middle time, currently 21,135. This bearish pitchfork seems to be showing the current bearish angle of attack, so to keep a close eye on the tines as they head lower. That is the upper, the middle, and now the lower time, currently at 18,500. The thing to watch out for below is actually a little distant away, and that is the congestion between 17,815 to 18,850, consisting of the August 2019 high at 18,850, the June 2021 high down at 18,110, the important July 22 low down at 18,230, and the October 2019 high at 17,815. LME 3-month zinc. 13 weeks ago, I stated there was a hell of a lot going on here with all the multicolored trend lines and patterns seen here. Since then, the picture has cleared up and we have established a more obvious trend. The key event was back in early April when prices, which had earlier penetrated but not really broken down through the lower time, currently at 30.08, of the big old 2015 to 2020 bullish Andrews pitchfork, which is highlighted on my daily chart in bright red, well, they finally pulled away lower. Primarily, I suspect, because the lower time was pulling away higher, up and away from the middle time, currently at 26.41, of the more recent May to mid-August 2022 bearish shift pitchfork. This is highlighted in purple on my daily chart. These two together had supported the market, but now that they were separating, thus their individual forces were and are less than their combined powers. We also at this time saw the establishment of the 2023 downtrend, currently at 25.85, which is highlighted in dark blue on my daily chart. This is still a valid downtrend and has prompted me to draw a lower bear channel line for the recent action, which is currently at 22.17, and is also highlighted in dark blue on my daily chart. Thus the picture is clearing up, with the market moving down within the dark blue April to date bear channel, which in turn is moving down within the purple May to August 2022 bearish shift pitchfork. To add to this, I have over many weeks spoken a lot about the March 2020 to June 2022 ascending expanding wedge pattern, currently way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long dated and wide pattern. I previously suggested only looking at just a possible primary target X for such a pattern. That would be in the 25.45 zone below. This was originally one for the back of the diary and to be reviewed maybe once or twice a year or so. However, 2 weeks ago the market reached target X, so I guess I will now have to look and see what a secondary and harder to reach target X1 would be. Well, I looked, and target X1 would be quite a way lower, down in the 13.45 zone. This is one definitely to put in the back of your diary and only look at occasionally. In the meantime, a more immediate support below is the October 2020 low at 22.82. This has been penetrated last week, enough that we had one close below it, and also a breach of the lower bear channel line. But it wasn't enough to verify it, and prices pulled up last Friday. The question now is whether this was just a tickle of the lower bear channel line or the first of perhaps a number of attempts to break it and make the decline even more acute.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.